Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is February 2 and let's sum up the results of yesterday's Federal Reserve meeting, which took place last night with Jakub Novak. Euro rose above 1.10 after the Fed signaled a change in their stance on monetary policy. Their statements during yesterday's meeting were more dovish compared to December, with interest rates increasing by only 25 basis points to a range of 4.5–4.75%. At first, markets did not react much to the news as everyone was waiting for the speech of Jerome Powell, but when the Fed chairman confirmed that they will no longer be aggressive in terms of interest rates, risk appetite surged. Speaking to reporters on Wednesday, Powell said they are forecasting a couple more rate hikes, but are ready to adjust their plans if price pressure is eased faster than expected. The 25 basis point hike that was made yesterday was another step towards policy normalization after a half-point rate hike in December and 4 giant hikes of 75 basis points before that. Most likely, the soft inflation data in recent months has been persuasive enough for the Fed to consider suspending their rate hike campaign. Although the committee continues to cite high prices, the hint of 2 more 25 basis point hikes confirms market expectation of a final rate hike of 5.25%. During the press conference, Powell admitted that the US economy is now in an era of disinflation with cooling price pressures. He stressed that more data is needed before they can declare victory, but did not specify how much they need to ensure that inflation is on the right track. And now it's time for GBP-USD pair with Jakub Novak. Let's have a look. Pound tested 1.2329 when the MACD line was already far from zero, so the upside potential was limited. Some time later, another test took place, but this time the MACD line was near zero, which was a pretty good reason to buy. This led to a price increase of around 20 pips. No other signals appeared for the rest of the day. Although the UK Manufacturing Activity Index did not impress market players, pound sterling dollar rose as the 0.25% rate hike by the Fed revamped risk appetite. Today, the Bank of England is expected to meet and raise interest rates by 50 basis points at once, which will support buyers' confidence in a new upward trend. As for the upcoming US data on jobless claims, manufacturing orders and labor costs, they are unlikely to have a significant impact on market. For long positions, you can buy pound when the quote reaches 1.2396 and take profit at the price of 1.2434. Growth will be possible only after the meeting of the Bank of England. However, make sure that when buying, the MACD line is above zero, or is starting to rise from it. Pound can be bought at 1.2364. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.2396 and 1.2434. For short positions, sell pound when the quote reaches 1.2364. And take profit at the price of 1.2329. Pressure will return if the Bank of England becomes dovish on future rates. However, when selling, make sure that the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.23196. But the MACD line should be in the overbought area, as only by that will the market reverse to 1.2364 and 1.2329. The next in line is intraday price movements of Nasdaq 100 index. Technical analysis is prepared by Arif Makmur. If we look at the 4-hour chart for the Nasdaq 100 index, it's clear that there is a deviation between the price index price movement and the awesome oscillator. Although currently NDX is moving harmoniously in a channel that is swooping upward, but by successfully breaking out high 12,248, then NDX had the potential to be corrected down to the level of 11,964 before returning to its initial bias, as long as the downward correction does not exceed the 11,852.2 level. Then NDX is still in a bull condition and has the potential to rally again. And now it's time for Aussie AUD-USD pair. Laurie Bailey is reporting in. The Australian dollar managed to reverse the early signs of a reversal and got above the resistance range of 0.7090 and 0.7130. The Marlin oscillator is now pointing upwards, and the price is aiming for 0.7284, the June 2022 high. Data on building permits for December just came out for this morning for Australia, showed 18.5% growth. Also, the Bank of England and the European Central Bank are raising rates by 50 basis points, which will most likely be reflected in the Aussie's growth as well. On the 4-hour chart, the price settled above 0.7130 and above the balance line, red line on graphic, and MACD indicator line. The Marlin oscillator has consolidated in the positive area. We expect further upward price movement. That's all for today. See you next time. Good luck.